Hey everybody, forgive me. Hey everybody, it's Chuck Barone back in action Monday, March the 4th, 2024. Happy to be here. What an incredible day we have today, guys. Wow, a lot of news today, a lot of big doings. I got so much stuff to report on. I got to try to find a way to fit it all in here. It's going to be really interesting. Very excited to be here. Uh, so, as always, before we get rolling, I just want to take a half a second. As always, welcome everybody to the show and thank you guys for your support. You guys showing up, watching the videos, hanging out, sending me messages while I'm doing this makes it all worthwhile for us, guys. We appreciate you. All right, so let's talk about these markets today. Wow, what a crazy day. So, as I've been telling you guys, Federal Reserve is not just going to cut interest rates because the stock market wants it to. It's not going to happen. So the market is now starting to digest this idea, right? And markets reacting accordingly. So you have the stock market not down big today, but the trend looks like it's kind of changing a little bit here. So now you got the Dow down 97, 38,989 on the Dow. The NASDAQ falls 67 today, 16,207 on the NASDAQ. And the S&P falls just 6 points, 5,130, and no records today. Let's just say that, right? I mean, these levels on all three of these markets are still pretty lofty, right? And they're going to come down some. I got a feeling here, guys. I got a feeling that the rosy days of we're bringing inflation down, everybody's hip to it now. It's a bunch of bullshit. And I think that people are coming to the realization that this is not going to be an easy one to be finished with. I've been warning everybody all along. Last time we had a situation like this, it took the government and the Federal Reserve almost 13 years, maybe even longer, to finally be rid of it. So the idea that they're just going to raise rates really and it's going to go away and everything's just going to go back to the way it was kind of a fairy tale from the beginning. And now we're living it, right? So the bond market today reacting, prices falling, yields rising, the 2 year up 4 basis points, 4.22%. The 2 year up 8 basis points, 4.61% on the 2 year. So, the bond market is starting to realize that rate cuts probably aren't coming for some time and adjusting prices like they do. The dollar today basically flat down just fractionally, 103.83 on the index, decently strong number. I think as the realization that interest rate cuts are not coming happens, you'll see the dollar strengthen a little bit. Look at precious metals. Wow. So gold and silver on a roll, starting the world finally waking up to it. It's just freaking awesome. So you got gold jumping $31.20 today. Great move. Now sitting $2,114.50 for an ounce of gold. Wow. Okay. And silver up 72 cents, which is a pretty big jump for silver. That's usually pretty conservative, doesn't move bigly. 72 cents is a pretty big jump. Now silver now standing $23.82 for an ounce of silver. You're going to see $25 silver soon, guys. I've been kind of predicting that for a while now. It's going to happen. Oil, well, this is the one. Oil down $1.23, but still holding pretty high at $78.74. I think the trend that was happening with oil prices going higher is kind of broken now. We'll see if it can resume or if it's going to go right back down to its trough between 70 and 75. If I was a betting man, I would bet on the decline. Bitcoin just continuing to rock and roll. Look at these numbers, guys. Bitcoin today up $4,857. Wow. Now sitting, get this, 67,743. Forget 69,000, bro. They're going to blow right through that. It's a record high. I think that's the record. I'm not sure. But this is on the way to 100 grand. I really believe that. Now that it's moving toward the mainstream, there's massive amounts of money sitting on the sidelines. Seeing rallies like this gets investors excited. So you're going to see investors starting to get in with a little bit here, a little bit here, a little bit here. All the good for Bitcoin. Okay, moving on. As we do every Monday, I'm going to talk about the data we're going to get this week very briefly, just to give you guys an idea of the important days coming up and the data we're going to get that can move these markets. So today, really nothing day. Tomorrow, we're going to get factory orders, which will show what's happening in U.S. factories here, and it's expected to be down big. Oh, God, it's not going to be a pretty one, down more than 5%. Wednesday, we'll get the mortgage bankers index, also down big. We'll get wholesale inventories, expected to be higher, and we'll get earnings. Thursday is the massive day. Thursday is a big one. On Thursday, we'll get jobless claims, which are expected to be at 218,000, up from 215. We're going to get unit labor costs. Oh my, that one's not going to be fun for everybody, for people hiring people at least, because unit labor costs jumping again more than half a point in the last month. Productivity numbers for the last quarter will be out tomorrow, up 3.1%. Very nice number. We're going to get deficit info for last month. Even though it was a short month, we still managed to rack up $63.3 billion in new government debt or deficit, a new deficit for the government. And the consumer credit number, which is really going to be another sad one. Consumer credit borrowing expected to be up $10 billion last month. On Friday, we'll get the non-farm payrolls. That's the monthly job accumulation. They're expecting 210,000. Now, last month, you remember, they weren't expecting a big number. They got 353,000. So let's see how close they are this time. We'll also get the unemployment rate, which is expected to be flat at 3.7%. All right, so this is a story I've been wanting to talk about for a little while now. Let me see how much time I got here. We know that these inflation numbers are bogus, right? And we know that they're lying to us because they don't want pitchforks and torches in the streets, right? Listen to this. I was doing this research, so I've been finding this little bits and pieces of how they're screwing us. Here's the truth. True inflation, obviously massively higher than they're reporting. What they did in 1983, at the height of the big inflation fight back in the day, they changed the way they calculate CPI. Until 1983, the cost of money was part of the CPI. That's gone now. Okay? Now get this, guys. If they used today the same way of measuring inflation that they did prior to this change in CPI, and I'm sure there have been other changes along the way, but this is a big one, okay? Listen to this. The peak of inflation would have come in at 18% in November of 2022. 18%, not 9 and change, 18%. And today the inflation rate would stand at over 8%, not 3 and change. So this is giving you an idea of this disconnect, right? Wall Street gung-ho, everything's better, boy, boo, record stock market, record low of bond prices, going up, yields coming down. Well, here, this now just kind of blows the whole idea up, man. And this also tells you the disconnect between Wall Street and Main Street, because Wall Street's giddy, partying. Main Street's pretty grumpy, man. Very grumpy, actually. And I am with them, because everything seems to be going higher and higher and higher and higher, except the paycheck, at least for me. So it's just a disaster. And these guys, I don't know how they live with themselves, guys, really. Because is everything a big scam now, really? Is that what's happening? Completely ridiculous. Oh yeah, we're talking about a good comment there, commercial real estate. When that goes kablooey, big pressure on the government to bail banks out. Because it's going to be all the mid-sized banks. Now, I'm sure they'll do the old trick where they'll bring in the big major banks to try to buy up pieces of it, or they'll bring in Warren Buffett and sell him a special preferred like they used to do back in the day, right? But that's going to be big inflation. Now, obviously, the crashing real estate market will be deflationary, but the bailout, more money being printed, massively inflationary, guys. So we are really in deep doo-doo here. Okay. But the good news is if you've been following what we've been telling you guys to do, just the simplest little things, save a portion of every paycheck, invest your money conservatively, even though you would have missed Bitcoin. If you have debt, start to pay it down, even if it's an extra $5 or $10 a month on credit cards. Do what you can to get rid of that debt. Don't take on new debt. Be very cautious about borrowing money, especially on credit cards for impulse stuff. You're at the store, oh, this looks good. Maybe this is a good deal. It's on sale. I'm going to buy it. Boom. You weren't planning on it. It's not budgeted for. This is how debt piles up on us without us even really knowing how, guys. So these are just simple, basic stuff. Be prudent in how you spend your money. Don't go, with impulse buys. Be very cautious. But you're going to live a very good life. You're going to have everything you need. You can have what you want, just not everything you want, right? So this true inflation number tells us a lot why everybody's so unhappy. Just some quickies before we get done for the day. Some interesting stuff here. Listen to this, guys. Wall Street now sweating stagflation. They're looking at the way this inflation fight is going. They're seeing the Fed, even with higher rates, inflation starting to tick back up. They're having nightmares of the 70s where the same thing happened. Inflation started coming down. The Fed thought they were in the right place. They started cutting rates. Inflation jumped back up. So the market's starting to understand that rate cuts probably aren't coming because they're inflationary. They're stimulus. Okay? So stagflation, that's the worst of everything, guys. That's where we have high inflation and a crappy economy, which kind of describes things right now, even though they want to keep telling us that the economy is great. Is it? Listen to this. Consumers fighting back against giant corporations and their greedflation crap, bro. Finally now, consumers have had enough. Listen to this. Nestle raised their prices last year 7.5%. Since then, they have lost 0.3% in sales. So sales falling. Danone, the yogurt company, raises their prices 7.4%. Their sales down 0.4%. And Unilever, the soap maker, raised their prices 13%. And they're watching their market share basically collapse. You're going to see all of these companies starting now to cut prices. I didn't really think I'd be seeing that again, but it looks like price cuts might be on the way for some of this stuff. Corporations are loath to lose market share. Once consumers gang up on them, like it's starting to happen, they're going to reverse their course. They got to fight for their market share. Analysts think that maybe this year, because of the way the economy is going, with all the great news, that there might be no rate cuts this year. Now, can you imagine how Wall Street's going to react to that? Because they're figuring one in June or July now. Of course, the March one's out. May, probably not going to happen. June, July, they're hoping July maybe. I'm telling you guys, I wouldn't bet on that, right? 91% of U.S. housing in this country, 91% of it considered overvalued. 9 out of 10 houses in the U.S. has a value higher than what it's really worth. Real estate prices, as we know, have been just going to the moon, locking people out of the industry, destroying the careers of guys like me, man. I'm sitting here twiddling my thumbs every day in the mortgage business. Rates are back above 7%. So hopefully someday we're going to see a little bit more, more houses on the market, a little bit more inventory for sale. And I think once that finally happens, you'll see prices start to come down as there's more competition to sell the house. They'll start with incentives. We'll pay $5,000 of your closing costs. We'll do this, we'll do that to keep the prices up. Then the prices will start coming down. You're going to see it, guys. And lastly, listen to this scam, guys. Wall Street now has begun contacting consumers to buy a portion of their home equity and their home equity increases. Can you believe this? They're not satisfied buying up all the real estate that's available for sale. Now they want to buy up real estate that's not for sale. What the hell is that? So they're contacting consumers. They offer you X number of dollars. You agree to give up a certain percentage of your equity, a certain percentage of your future equity, right? In exchange for a sum of money today. Can you imagine having some private equity group, Blackstone or BlackRock, as a partner on your house. What could go wrong here, guys? Can you imagine? This is just lunacy. And these Wall Street guys, the greed they have, the levels of greed. And I always ask the question, how many steaks can you eat, man? You know, these guys, there's just no number that will satisfy the money lust these guys have. And it's sad because you and I, we're the ones paying the price for their greed. Anyway, guys, that's it for the day. I did manage to get done in 15 minutes today. Pretty awesome. I've been babbling on. I always do that. As always, guys, we appreciate your support. If you can, double check your subscription. I've had comments and messages from a few people. Even was sitting with a guy in my office, showed me he got unsubscribed, didn't do it himself. So double check your subscription. Make sure you hit the alerts so you get notifications when we're going to have something new on there. We're going to start the educational videos up pretty quickly here. And of course, we're going to do our daily dose like we do and did today. Anyway, guys, hit the like button. Hit me up in comments and questions. You know we love you. Be back tomorrow, guys. Take care. Thanks.